Right, guys, we'll get started in a minute. Set up my other computer so that I can see you guys on the chat as well, right? Cool. Okay, so for those of you who are first time here joining us, I'd like to welcome you guys, right? So this is something that we do on a weekly basis. Okay, the objective and the intention here is, of course, number one is to walk you through and show you the process of how we do the analysis, how we prepare for our trades. And of course, the second objective here is also to kind of like share with you some opportunities for the week. Okay, and the third one here, I feel that's most important is a platform, an opportunity for you to actually ask questions that you perhaps would like to find out a little bit more about the market, about trading. Okay, so each week we come in is gonna be a very casual one. Okay, where I'll just spend maybe the first portion to share with you some of the analysis, some of the opportunities that I'm personally looking out for this week, and then after that we'll open up the room for Q&A. Okay, where if you have any particular instrument, any particular currency pairs you'd like me to look into, share my thoughts, just type it into the chat. Or if let's say you have any questions, then just type it into the chat. All right, so great. We'll get started. Okay, so hope you guys have a great weekend. And last week was really an easy week for us trading the market. Okay, now quick teaser over here for this week. It's looking like a lot of the pairs are likely doing kind of like a corrective phase, which means that you need to be very, very patient for this week. Okay, so for me over here, let me bring you to my watch list. Okay, I am currently in one trade. Okay, we kind of like got into this at the very, very morning. Today when London market opened, we kind of got in, and this is slightly in profits at the moment. Okay, so again, some of this live trades analysis, they are time sensitive, right? We are doing it right now in the evening, so of course some opportunities might already happen. Okay, but I think it's important to walk you through the thought process as well, so that you don't only look up for trade, but I think through this regular sharing session you actually can benefit from it as well. Okay, so I see Adrian here. Hi Adrian, asking about Kiwi Cat, right? So definitely we'll look at it. Okay, after I share my watch list, I'll go over to the pairs that you guys would like me to share some view on. Okay, so over here, let me share with you Canadian franc as to why we are looking to take that trade. Okay, and a little bit on how we actually executed this and what we want to see from the market. Okay, so first off over here, I'm using a lot on 4-hour and daily time frame for swing trade. That's my style. Okay, so what you see over here is basically a 4-hour time frame, and we do see, prior to all this, we do see market starts to go up in a very slow manner. We call that a crawl pattern. Okay, and after that, that's where the first impulse came in, and last week it did a correction over here. Okay, and what I like about this correction, you can see, is that we have the expectation of 1, 2, 3 completed as well. So this is more like an expanding flat, right? It's a pattern in Elliott Wave itself, where it's a continuation. So you get an impulse, you get a 3-wave correction, then you expect the move to continue. Okay, and not only that, in the morning when I came in and I look at this here, I see that there is also a small pattern that I recognize. Right, so maybe a mini lesson for you guys over here as well. You can see this is an impulse followed by a flag, right, on a bigger scale. And of course, what you see over here is a mini impulse and a flag as well, right? So you have same patterns, just at different size, right? Different scale, right? So every time you see an impulse and then you see a correction pattern like that, you know there's a high chance this will continue. Very simple patterns. Once you are able to identify them, you will be able to trade them, right? These are high probability patterns. Okay, so of course, then what I did in the morning is just go down to a 1-hour time frame to kind of look for my specific entry point. So I did just a simple breakout with the stops above that high. Okay, So I wouldn't suggest you chase this trade right now, okay? But just wanted to share with you that this is one active trades that I'm in right now. I'm looking to shift it to break even soon, depending on how the US market move later on. But I think it's important to walk you through the thought process, the reasons as to why we executed this, so that you can actually learn from this whole process as well. Okay, so this one. I'm still monitoring a few of these trades here. You can see on the right, those are my watch list. Okay, now I'm not sure if I shared like specifically dollar cat with you guys last week. Okay, but anyway, I've been monitoring this pair on dollar cat for a few weeks. Okay, right now I'm still very much interested in the upside. Let me bring you to the daily to have like show you what I'm seeing, right? So on the daily time frame, you can see this is coming down, very corrective in nature. So that's usually a pattern. We call it crawl. You can call it diagonal, you can call it wedge. Basically, to me, again, the name is not important, but you recognize this pattern, this phenomenon, you know there's a high chance price will start to rebound, right? And that's the part where I'm very interested in the upside, because you can see the room to the upside is just great, right? It's huge. And on the 4-hour time frame, that's where I start to see, okay, we have this V-shaped formation, and then we start to see this 3-wave correction. Again, a pattern that we can recognize, right? But today, we do not have a buy setup yet. Okay, I'm looking for this to push up. Okay, but right now, we do not have a buy setup according to my rule, according to my strategy. But of course, the direction that I would suggest that you want to focus on is look for the buy opportunity. Okay, simply because the risk to reward ratio is just more to the upside. So you might have your own technique on entering. It can be price action, it can be candlestick formation, it can be indicators. To me, as long as it helps you to make money, any method works, right? So for me, my technique here, based on right now today, there isn't a trigger point. There's no entry, but I'm still monitoring for any potential buy go to the upside. Right, so do keep close watch on this, because likely this can be ready this week, right? Maybe not today, perhaps tomorrow, Wednesday, or even Thursday. Okay, so this might potentially take off, and if you take a look at the events calendar, right, we do have Canadian data this week as well, right? So that can be the catalyst to push the Canadian pairs. Okay, so I'm in Cat Franc. I'm looking to get involved in Dollar Cat. I think Adrian is asking about Kiwi Cat, right? So we do have various Canadian related. I think the opportunity on Cat is definitely there. Okay, so we do have the catalyst this week as well. So usually I like it like that, because the news, the events that's happening can be the factor or the force to push price impulsively, right? And that's what we want to write, right? So Dollar Cat over here. Okay, I'm seeing Wei actually says it looks like trapping bias. Okay, maybe one more down. Yeah. Okay. There's a possibility this can even do something like that, right? Maybe a small push here, and then it keeps going down, something like that. Okay, and then that forms a double bottom. Okay, absolutely possible. Okay, so that's why for me right now I say that based on today's development, there's no entry. Okay, for me this is definitely not a buy, right? So yeah, so I'm actually sitting on the sidelines, but I'm not interested in the sell. Okay, I'll be more focused on any setup that allow me to buy. I'll get involved in it and see how it goes, right? So this on Dollar Cat. Okay, now I was monitoring Pound Cat in the morning. Okay, over here in the morning we run a 30 minutes or so session every day to kind of like come in, look into the market, the stocks, the FX market, and then we were looking at this, right? And I was saying that I wanted to give it a bit more time, because in the morning it was just something like this. I want to see if this can form a correction today before the pop. Okay, but these are what the market does best, right? It's always gonna just do what it wants. It's not gonna do exactly what you want all the time. Okay, so it just pops up like that. So obviously I'm looking for the buy. Why? We have this impulse, we have this correction, we are looking for that push, right? And the upside is great, right? So based on what's happening right now, I'm seeing that price is already starting to move off. Obviously I wouldn't jump in now, and obviously I wouldn't suggest you to jump in now. Okay, but I think with this impulse push, right, you might need to then wait for maybe 2 or 3 days for it to form a correction before you take that move to the upside. Okay. So this week, I'm also monitoring on pound CAD for potential push to the upside. You realize it's also Canadian. Okay, and most of this, I'm looking to sell the CAD, right? I'm looking to ride on the potential weakness on CAD. Okay, it might or might not be. Okay, I might be absolutely wrong. Okay, but as traders, you need to pick a side, right? So for me right now, what I'm seeing on the chart is that technical tells me that upside, which is Canadian weakness, seems to be a little bit higher in probability. Okay, so that's what I'm looking out for. So with this push here, again, we might need to wait maybe 2 or 3 days before we get a trade to the upside. Okay, but this week, definitely looking at CAD franc. Sorry, not CAD franc. Pound CAD as one of the potential setup. Okay. Now another one I'm also keeping a close watch is actually Aussie New Zealand. Okay. For those of you who are keen, okay, can keep an eye on this pair here as well. Okay, why? Because I'm seeing that this is a bottom, right? We see a small impulse push, and then after that, price came back down, very, very corrective in nature. So this is a pattern I recognize again, and the probability is to the upside, right? So that's what I'm focusing on. Now, of course, one simple setup that you can take reference to, of course, is the breakout, right? Something like that. This risk to reward ratio is about 2.5, not too bad for a short-term trade, right? But for now, I've not put in my orders yet, right? I've not put in this trade. I want to give it a little bit more time and see how it goes, because this can easily just keep doing something like that, right? Then from there, maybe somewhere at the bottom, that I'll take that trade. Okay, maybe on the 1 hour time frame when I'm able to kind of squeeze the stop loss a bit smaller to make my risk to reward ratio a little bit more worthwhile. Right? So I'm definitely looking at this, but right now I don't have an order yet. Right? So I hope sharing with you these opportunities does not mean you want to follow me 100%, okay? But it's more of like bringing your attention to these opportunities that I'm personally looking at, and of course, if it fits into your style, fits into your strategy, into your trade plan, then great, right? It's more like sharing ideas, right? That's all we want to do over here. Okay. Now, gold as well. Okay. We are expecting a continuation push to the upside. I think the bottom, at least for the short term, may have established with this double bottom over here. Okay, because you can see it has broken impulsively off this neckline of the double bottom, more or less completed on and confirmed in terms of the double bottom. Right. But of course, I'm not trading this double bottom over here for gold. I'm more of a macro long-term bullish on commodities, especially precious metal. Okay, so if you have been following me sometime on YouTube, you hear me share about all this as well. Of course, with silver at the same time, right? We are looking for long-term upside, simply because on the fundamental point of view, we are looking at dollar weakness going into 2022, 2023 because of the inflationary pressure that eventually will kick in. Okay? And inflationary pressure, in other words, is just devaluation of a currency, and in this case, it's the dollar, right? And what would fund managers and investors do when there's a devaluation of a certain currency? They will want to hedge against it. Okay, so you hear the term inflationary hedge, and one of the most common asset people hedge against is, of course, your precious metal like gold, silver, or even platinum. Okay, and of course, right now we do have some new assets like cryptocurrencies, right? But gold, silver, precious metal are still the traditional asset. Okay, so that's what I'm seeing, that moving forward in a year or 2 years time, this can really take off. Right, so I'm actually looking for longer term trade, or you can even call it investment. Right? So if you take a look at my gold chart over here, we do have a price target around 2074. And I would say that's a very, very conservative target, because I'm looking at 2074, this level here, being achieved somewhere around end of this year, right? By end of this year, 2021. But the inflationary pressure will not stop at the end of 2021. In fact, I see that the whole devaluation of the dollar can last towards like 2022 or even 2023. Okay, so this target here is definitely very conservative. Okay, and there's a huge upside potential once this is broken. Okay, so let's see how it goes. Again, if you're not monitoring all this, perhaps through this sharing, okay, it will bring your attention to them, and want to start keeping an eye on it. Okay, another one in the long-term trade, I'm still looking out for opportunity is, of course, dollar Mexican. Okay, to sell the dollar because the dollar is going to be devalued due to inflationary pressure, and to kind of like buy up Mexican peso, right? The reason is because if you compare dollar and Mexican peso in terms of their interest rate differential, okay, we call it the swap fee, is pretty attractive, which means if you hold Mexican peso and you let go of the dollar, you actually earn interest. Okay, and of course you don't only earn the interest here, but if dollar really weakens, then you also can earn from the directional move, right? The capital gains. Okay, so over here you can see my target for this particular pair, dollar Mexican, is the conservative, I would say, target here is potentially at 18.49. Okay, I think it's very, very achievable. But at this very moment here, there's no entry for me as well, right? Okay, I would want to wait for a pullback first. Okay. So again, might take some time. I'm not rushing into it, but again, using this opportunity today to bring your attention to setups like that from a macro perspective as well, so that if something that fits into you, then you want to start monitoring. Yeah, so hope that helps. Okay, so this week itself, as I mentioned at the start of this day's sharing, is a lot of all this currency pair is basically in a consolidation phase. Okay, especially since last week or the past 2 weeks, we have quite a solid move in the market, right? So that's how the market move. After a few push impulsively, it tends to take a break. Okay, and that's where you know patient with it. Okay, that just means that maybe this week you might not get a lot of setups, you might not get a lot of trades, right? But I always say we go for quality, not quantity. Okay? If there's no setup, just be it, right? Just wait, and then when you set up, then only you go it. Okay, so right, so that's the few pairs that I'm personally monitoring. Okay, not a lot. Again, I don't usually like to look at too many pairs. I'll focus on the game quality. I want to focus instead of like spread out all my energy, right? So those are the pairs that I'm personally looking at. Okay, so let me take a look at some of the suggestions or maybe questions that you guys have, right? So I remember Adrian actually asked about New Zealand cat, right? So let's take a look at the New Zealand cat pair. Okay, and I'll share with you what I think about it. Okay, but for those of you who are watching here, of course, I want you to know I can be absolutely wrong, right? I never say that I'm always gonna be right. Okay, so always take my sharing, my analysis as just another perspective. Okay, at the end of the day, you want to have your own individual decision making process. I think that's very important. Okay, so now let's go over to New Zealand cat. I usually start from a daily time frame and start to go move myself to a lower time frame and see how it develops. Okay, now immediately on the daily time frame, okay, what I can see or what stands out to me, of course, we do have this mini crawl here. Of course, it's already done. Okay, and at the same time, I want you to be able to see, right, this kind of patterns repeat itself. Okay, now this is interesting, right? Great that Adrian actually brought this up, right? Then we have this opportunity to share with you or talk about patterns happening in different scale and different sizes. Okay. Now take a look at this. Okay, maybe I'll remove the bigger one first, right? Take a look at this small pattern here. Yep, it's already done because you can see it's moving up very slow, very correctively. We call this a crawl, but basically it's a diagonal, it's a wedge, whatever name you want to give it. Right? Usually you see a pattern like that where you have this very strong push and then a very slow move. You expect the reversal, which it did. Perfect, right? Very, very nice reversal back to the downside. Right? So I want you to look at this pattern for a moment. Okay, this is the pattern, right? Impulse up and then very slow move. Okay, learn to recognize it. Now, let me show you the bigger ones that's happening right now here as well, right? Can you see that, right? It's not exactly the same, but it does give you that similarity. Okay, from this low, it does a very first fast push up, and then from there, it just basically keep climbing, but it's getting slower, right? So this can also be your bigger corrective crawl pattern, and from there you can then expect this to come back down. Okay, So one level that you potentially want to keep an eye on is somewhere around this structure low. Okay, this previous low, if I put in the price point 0.8340. Okay, somewhere around that, right? So you can potentially look for price to kind of like come back down, okay, towards 8340. Okay. And of course, over here, you can have, if you're familiar with technical patterns, you can even start to see, okay, it's not very ideal, but potentially, kind of like in a shoulder pattern developing, something like that. Okay. So then you have like your left shoulder, your head, and then right shoulder, and then the push down towards 8340. Okay. That can happen. Now, that's the big picture, right? So I always go through the higher time frame to understand like where is price likely going, how much room can it likely move towards. And then from there, I'll start to go down to a lower time frame and see what's happening. So you can see as of now, right, on the 4-hour time frame is, okay, we do have this move up very fast, very strong, okay, and then we do have this move down pretty strong as well, and then after that, move back up pretty strong as well, okay. So if I bring you to the 1-hour time frame, perhaps that's a little bit clearer. Okay, so you can see over here on a 1-hour time frame, it goes up fast, it comes down fast, it goes back up fast. Okay, we call this move impulses, right? A move that is very strong in momentum, it move off in the direction very fast. Okay, every time you see impulses that looks like that, don't jump into a trade. Okay, so we call this V shapes, right? Because it's just basically impulse, 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 impulse. Looks like V shape. Right? So every time you see a V, don't jump in again because it's not going to benefit you as a trader. Okay? I want you to just imagine, right? I repeat this a lot of times already. If you enter here as a buy and then market does a correction, then basically you'll be stuck in it for some time before it starts to go. If it goes, then you need to hold through a trade like that in that period, right? Not easy because psychologically, sometimes you make, sometimes you lose, sometimes you make, sometimes you lose, and then you do not know what to do with that position. Okay, now the other situation here is you buy in here and then this comes down very fast and then instantly you lose on that trade, right? So it's not going to benefit you. And there's this possibility, yup, it can go up, but most of the time after a strong push like that, if it's going to continue up, it's going to go slow. Okay, so same thing over here. You're not going to make a lot of profits and you're going to do it very slowly, right? You're going to make a bit here, give up a little bit, make a little bit more, give up a little bit, and it's not going to help you psychologically. Right? So that's why I always say whenever you see an impulse move, okay, just give time to the market and let it show you what it wants to develop. Right? So case in point, if you take a look at New Zealand CAD right now, we do have this V shape on a 1-hour time frame. So leave it aside. Okay? Even on a 4-hour time frame, you can see there's nothing for me to kind of like analyze or even share the probability of where is it going. Okay? Because this here can develop into many, many different ways. Right now, there's not enough data points for me to do the analysis. Okay, so most of the time when I see something like that, I'll just move on. Okay, maybe come back after a few days or even only come back to this pair next week. Okay, so that's my view on New Zealand CAD. Hope it helps, right? So to me, I would say long-term picture, okay, potential is due to the downside, but for the short term in this week itself, just stay out of it. Okay, so that's my view on the CAD. Okay, I hope it helps. Oh, I see Tony here asking in Chinese. Okay. Let me just take a few seconds to read, alright, the questions. Okay. So Tony, you are asking basically 爬行, which is our crawl pattern, versus 调整, which is our correction, right? What's the difference? Okay, so Tony, I would use English to explain because Monday session we do it in English, okay, and Thursday we do it in Chinese, right? So today's session I'll just explain it in English so everyone knows about it and everyone can understand. Okay, let me share with you a chart. Okay, I think some of you probably hear of this before. Okay, but I'll share with you this chart here on dollar franc. Okay, to show you what is crawl and what is correction. Okay, let me take you back over here. Okay, Now, I want you to take a look at this part of the chart, right? This part, right? Now, first we have a very strong push to the upside, and then after that we start to form sideways move, right? A slow move to the downside. Now, this is what we call a correction. Okay, so you have an impulse push and then a slow move down, right? So that's a correction. Okay, so you can see, right, similar drawings. Okay. Now, what's a crawl is this: an impulse push up and then a slow move up, right? So the drawing looks like that, right? So usually you see I draw impulse, crawl. Okay, can you see this two similarity, right? So that's the difference behind it. Okay, correction and crawl, they are slow in nature. Okay, it's just a name, a term that we give it to differentiate it. Okay, that's all, right? But basically the move itself is just slow and it's not really going anywhere, right? So hope that's clear. Okay, again, if you need to, go back to dollar CAD on a 4-hour chart, reference to it, because on the same chart you can see impulse correction followed by impulse and crawl, right? So you have two patterns side by side. You can do a comparison. Okay, now if you take a look at the most recent development on dollar CAD as well, okay, again, you can see how this is coming down. Yes, there's this one huge push here, okay, but generally to me, this whole chunk is still pretty much a very slow move as a whole. Okay, so of course, there's no buy setup, right? I'm not buying it. Okay, but I think if you're looking to sell, at least wait for the pullback, then you take the trade down. Okay, so those of you who are quick, again, this can be a potential head and shoulder pattern, right? Something like that, and then you have your right, left, head, okay, and then the downside. Okay, so yeah, but of course, this is not gonna happen in this week. I think you need to on that. No trade on dollar franc anyway, right? Okay, so hope that's clear between correction and crawl. Yeah, good. Okay, Jimmy asks, I still don't understand how to use fundamental, many indicator, how to use it. When we know the fundamental data from 3 or 4 economic, we take the conclusion as big picture where the market move. Okay, now very good question. I think some of you who are also trying to understand or incorporate fundamentals into your trading probably would have the same question as Jimmy. Okay, it's more of like, how do you use or how do you interpret the data from fundamental? Okay, now a lot of traders out there actually uses economic data to trade. Okay, so they call it news trading, right? Now I don't do that very actively. Okay, but I want you to know that fundamental analysis is not just about looking at economic data. Okay, yes, economic data is part of it, but if today you want to understand fundamental, right? Like earlier in this sharing, I talk about the devaluation of the dollar. Okay, that actually comes from fundamental analysis because you need to first understand the whole effect, right? Of currency market, which means you have like the big players called the central bank. They dictate the money supply, right? So they can do like increase interest rate or they can lower interest rate, and of course they can then decide to do hiking or easing policy, right? Which means that tightening or easing policy, which means they either print money or they collect money back, right? So that itself is fundamental. Okay, and the only way for you to study that is go and read up the central bank report, okay, to understand like what are they looking out for. Okay, because sometimes the central bank looks at labor data, for example, employment rate. Sometimes the central bank looks at inflation data, like your CPI, core CPE, for example. Right? So you need to first know like what are the major central banks looking out for, and then you pay attention to those economic data because those are then important data to the central bank, therefore it's important data to you. Okay, if you want to understand fundamental analysis. So for example, if you go and read up a little bit on the Federal Reserve monetary statement, right, the summary version of it, and you find out that what the Fed right now is focusing on is more towards full employment, okay, and not only that, they are heavily focusing on average long-term inflation hitting 2%. Okay, and they did mention that they don't mind the inflation for the short term to exceed 2% so that they can pull back the long-term average towards 2%. Okay? So that's something new because they have not been doing that in the past. And understanding that perspective, you know that okay, the central bank is ready to allow the economy to overheat in a short period of time, which means inflation is gonna kick in and they are not likely gonna control it too tightly in a short period of time. Okay, and that's why we talk about how potential inflationary pressure is gonna kick in the next 1 to 2 years, and how we talk about the devaluation of the dollar is likely gonna happen. Okay, so that's from that fundamental perspective, coming down to understanding which economic data is important. Okay. Now, there is advantage and disadvantage in fundamental analysis versus technical analysis. Right? Fundamental gives you that understanding of the market, give you the big picture perspective. Right? But fundamental analysis can't give you the exact entry and timing. Right? You only know, okay, long term, if this is the trajectory that the Federal Reserve is going to do, we're going to see dollar devalue. We're going to see weakness in the dollar. That's about it, right? You have a big picture, you have a general direction. That's fundamental. But technical allows you to know exactly when to get involved in, what price to get involved in. But technical itself can't give you the understanding of why the dollar dropped or why will the dollar devalue, right? So each of it has its pros and cons. And to me as a trader, I always say, in the financial market, actually, the more you know, the more knowledge you acquire, the better you're going to be. But at the same time, when you are executing your trade, you need to be very clear, like which one will determine and be the trigger point for you to take a trade. Okay, so for me, like, I don't take a trade just because of fundamental, right? So my analysis and trading process is more like 60% comes from technical and about 40% comes from the fundamental perspective. So for example, like I know the dollar is likely going to be devalued. I'm looking at like gold right now, right? For the long term, that's the reason of why I'm focusing on it. And then I'll come down to the technical to help me pinpoint, is it now to get involved in, what price to get involved in, so that I would have positioned myself much better. Okay, so that's the idea between fundamental and technical. Yeah, so I hope that helps. Okay, great. Yeah, so good. Okay, so yep. So Adrian also asks, is it necessary to look from monthly time frame? Now I don't do that, right? Because even from weekly time frame perspective, to me is a little bit too far-fetched. Okay, but no harm, right? No harm looking at higher time frame. But if you are trading, then it doesn't really help you in any way. Okay, because if you're looking at weekly chart or even monthly chart, if you're executing position on those time frame, you're probably holding it in years, right? So that's not something that I do, and I don't think that's what something most traders would do. Right? So I would say if you're looking at daily, of course you need to zoom up a little bit, right, on the daily scale. Be more than enough, right? You do not need to go like weekly or even monthly. Okay. So I see Chris here also asks, can you explain the possible number of waves in a crawl before reversal? Very good question. Okay. Let me bring you back to maybe dollar franc. Okay, and let's take a look at maybe the 4-hour time frame here to talk about it. Now, of course, there is what we call expectation. That means what we anticipated to happen, and there is the not ideal situation, right? So again, I want you to know that as traders, you need to expect or anticipate something to happen for you to take a trade. But at the same time, you need to respect the market, knowing that the market doesn't need to give you what you want to see. Okay, so I'll share with you the ideal one, and of course I'll show you if we can find some. I'll show you some where it's not ideal, right? It didn't happen exactly, or some of it happened exactly. Okay. So I'll draw and illustrate here first, and then we'll go into the charts. Okay. Now, first off, of course, let's just use the example of an up crawl, right? So you have an impulse push, and then after that, you start to form a crawl, okay, like that. Now, in terms of Elliott Wave, we have a diagonal, and usually the diagonal will have 5 moves inside it, right? So for example, you have your first push, your second, your third, your fourth, your fifth, right? So this is usually the classic diagonal in Elliott Wave. Okay, and of course, my drawing might not be very nice, but let me put in some labels here as well so you can see that. Okay, so that's how usually the Elliott Wave diagonal looks like. Okay, so you can actually count the wave or the move 1, 2, 3, 4, 5, or you can also look at it. Okay, there's like 3 tops at the top. Usually it also means there's 5 moves, right? Because to establish 3 at the top, you need 5 moves. And most of the time when this is done, when you can see 5 moves, that's where you have 1, 2, 3, 4, 5 completed. That's where the reversal likely ready to start, or likely gonna reverse. Okay. So with that understanding, okay, let me bring you back down to the chart. Okay, and I want to zoom in a little bit and show you here. Let's focus on this portion, right? So you can see over here, if I draw in a little bit on the lines to give you some reference. Okay, now this is again not like picture perfect, you're not gonna get that, but more or less you can see roughly you have 1, okay, 2, 3, 4, and 5. Okay, so not very clean, but you can see over here you have this top, comes down a little bit, goes up, another top, it comes down a little bit, and then you have the third top here. Okay, so as a whole, in terms of Elliott Wave, you have that 1, 2, 4, 5, and it's ready to pop, right? Now, if I go down back here, which is right now still developing, okay, up this a little bit. Over here, you can see this is developing, right? So again, same thing. You can see this is 1, 2. This is the third time it came down, right? So that's where you can see 1, 2, 3, 4, 5. Maybe this is where it starts to reverse. Maybe, again, nothing is going to be 100% certainty, but based on a crawl, a wedge, a diagonal, right? If you go and read up a little bit on Elliott Wave, that's how it's being done, right? You need back 5 wave. Okay. Not all the time is gonna do that. Okay. I would like to find if there's an example. Okay. Let me go through charts and find that. Not all, like not all diagonal, not all crawl are gonna be picture perfect, right? I want to find examples where it just doesn't work out. Okay, since we are here anyway, I'll show you this chart here, right? I think this one should be clear enough for you to illustrate that as well. Okay. Now, before we talk about the top one, can you see the bottom here? Okay, this is also a crawl. Again, why? Because you can see this is fast and then it starts to slow down, right? So this one here, you can see there's only 2, right? Which means there isn't a 5 move inside it, right? But does it mean that it is not going to work out? No, right? It still move up very fast, okay? So this is example of how, while we expect 5 move inside, sometimes it might not give you that, right? And of course, you can see over here, this is also the crawl that you can see over here, right? Again, it's not picture perfect, right? You're never gonna get like super ideal diagonal all the time, but you want to look at it from the characteristics of how price is moving, right? This is going up very slow, so that's what we call a crawl. We describe it as a crawl. You have an impulse and then a crawl, you know likelihood this can come down. So you do not want to buy up here, right? You absolutely do not want to buy up there. Right? So I hope you can see that, right? So you have a down crawl, you have an up crawl here as well, right? This looks very nice, right? It feels good, right? It looks nice, right? This one looks a little bit ugly, okay? But they are still your diagonal, your crow. Okay, so I hope that helps. Hey, I see here Suhail asks, okay, which indicator works well with Elliott Wave? Now first off over here, there are indicators that can assist you. Some traders use RSI, some traders use MACD, some traders use pivot points, some traders use even moving average to help them. Okay, but at the end of the day, right, you realize that what we are doing here is we are recognizing patterns on the chart. Okay, so I don't really use a lot of indicators. I do use RSI over here from time to time just to tell me a confirmation to help me identify if is it likely this pattern developing or the other pattern developing. Okay, so that's the only usage I use for RSI. But of course, I know traders who use MACD to help them in their Elliott Wave analysis as well. Right? But at the end of the day, back to the bottom line, you want to be familiar with the patterns that's happening on the chart, right? So you have like your flat, you have your flag, you have your diagonals, you have the crawls. Those are the pattern you want to be familiar. Okay. Indicator to me again is more of a complementary tool. Okay. So I can't really tell you exactly like which one can help. But yeah, right. You depends on why you want the indicator. Again, you need to understand the usage, the strength of the indicator, then it'll help you in your analysis. Okay, so I hope that helps. Hey, Jimmy asks, in my other webinar, I just focus on interest rate, print money. Is that enough to have a clear picture where the market is going? Yeah. Honestly, if you take a look at fundamental, right, Jimmy, central banks at this very moment, there's only two things they can do. One is they play around with interest rate. The other, they play around with the money supply, right? So interest rate, they can only either do an increment of interest rate or they can drop interest rate. Okay, and then in terms of money supply, they either print money supply, that means they either print money to increase supply, or they do tightening, which is to reduce the supply. Okay, so at this very moment, central bank mainly can have these two tools that they can control, right? The economy in a way. So I would say fundamental is not just about that, but central banks only have these two things they can play around with at this very moment. So if you understand like when they're gonna play around with this, when they're gonna increase rate, when they're gonna drop rate, when they're gonna print money, when they're gonna do tightening, right? And how will the market react to such decision making process? Then you have a good understanding of fundamental. Okay, and I think if you're referring to the webinar, then yep, right. Basically the webinars, the content that I present inside there, if I remember correctly, I think that webinar we talk about fundamental, right? I show you the big picture, how from central bank decision making process affects your currency itself. So that's the understanding of fundamental itself. Okay, so again, don't overcomplicate it. Okay, fundamental itself is not complicated. It's not sophisticated. Okay, the understanding of it is not sophisticated, but of course, if you put it into real life context, it doesn't work out as what concept always says, right? Because the idea here is that if you increase interest rate, then it will help to slow down inflation, right? But it doesn't happen exactly immediately in real life context, right? It takes times to play out. Some people or some businesses might not be affected and things like that. So I want you to know that whatever we are sharing is based on a principle, framework that happens like that. But if you're comparing it to like actual real life context, of course, it's not as straightforward, right? If it is, then we'll have an ideal economic world, right? Where everything is then perfect, right? But we are not, okay? So understand that as well. Okay, so if you need to, then of course, just go back and reference back to that webinar, right? And then take a review on that. And then basically in that webinar, we covered the fundamental. Okay. Krishna asks, anything to expect from pound pairs this week? The only £1 pairs actually I'm looking at is pound cat. Okay. Again, this is already moving off. Yeah, right. Initially, I was thinking again a correction by today, and then tomorrow we have a good trade up, but it's already taking off. So again, I'm not gonna rush into this, but perhaps if this starts to form a correction like that by end of this week, maybe by Thursday or even Friday, if this develops, then we have a trade to the upside, right? So in terms of pound pairs, this is the only one that I'm really looking out for, because you can see the upside is big, right? The other pound pairs, not really much opportunity. Okay, give it time, right? You take a look at pound dollar, is basically sideways. Is this drop on this drop, and then just go sideways, right? So nothing much for now. Okay, even pound yen here, you can see just going sideways much here. Yeah, right. So the crosses again, not something you want to focus on, right? V shape, never trade that, right? V shape also, never trade that. Okay, so see this, right? Why after an impulse you don't sell here? Because this can happen, okay? And then if you sell there, you basically trap yourself in that position. Okay, so yeah, right. The only pound pairs right now I think closest to giving us a potential clear setup, at least for me, would be pound cat. It would be that, nothing. Yeah, pound franc potential, but if this develops and then this comes down, the downside is not attractive, right? Because you can see, so if price comes here and then give us a reaction, then potential target is not that is attractive enough for me. Okay, so to me, pound cat is the only one for this week for upside. Okay, but let's see how it goes, right? You don't go and buy now. Okay, we need to see a correction happen, okay? And for this to develop, you need a couple of days. Okay, because we are on a 4-hour time frame, right? You need a couple of days. So by then, likely it's already gonna be Thursday or Friday or even next week, right? We need how the market develops. Yeah. Um. Oh, okay. So Wei says, GJ, think diagonal forming, right? Okay. Maybe slightly different time frame. Okay. If you're taking a look at like smaller time frame, you do have this pattern over here that is upside, right? But to me, I don't really focus a lot on like smaller time frame. Okay, so you realize I'm more of a higher time frame guy. Okay, so of course over here, GJ, okay, there are few ways you can take a look at it. So you can see from this high here, it drops down pretty fast. Okay, so what I'm seeing over here, there's a possibility this can develop into 1, 2, 3, and that forms what we call in Elliott Wave an expanding flat. Okay, so what is an expanding flat? Is actually a continuation pattern, which means that from there you might expect this to go back down, right? So you have an impulse, correction, impulse. Yeah, but the question now is more of like, will this be an expanding flat? Okay, will this be the pattern that develops? Very hard to say whether is it gonna be, right? Because the most difficult pattern Elliott Wave to go and anticipate and trade is your running flat and an expanding flat. Okay, it's very hard to anticipate that two pattern. We were looking at RSI. There's really nothing much that we can take a look right now as well, right? So again, I'm just keeping this aside. I'm not really focusing on it. Yeah, right. When things are not clear, you realize my approach is just give time the market, and sooner or later it will develop into something that is clear enough for you to take. Yeah. Okay. Krishna also asking Euro yen, right? Yeah, we were looking at Euro yen last week, but you realize that it didn't develop what we want, right? Okay, so if you were following us last week, we say that if this develops into a diagonal like that, then we have a solid trade. But the entire of last week basically it just goes sideways, not going anywhere. So looking at things, how it's playing out, right? This can be taking way longer, okay? Which means this can go up, come back down, go back up one more time, and then this forms the core. So as of this week here, I don't think there's much of an opportunity right now unless this starts to form something like that, which again will take time. Okay, so I think this week, I think this week is just basically gonna be another move. You're gonna be trapped within this area the entire week because it's in a corrective phase. Okay, so be patient on this. I think Euro Yen on a very big picture perspective, you have a very solid trade downside, but I don't see it doing it yet. Maybe next week. Okay, but I can be wrong, right? I can be wrong, and then this just takes off. But I think I'm a little bit more conservative and cautious on this approach. I would say for me, I would be a little bit patient and give it one more week and see how it develops. I'm not interested in the upside for sure. At least based on what I'm seeing right now, I'll be more interested in the downside. Okay, you can see big picture to the downside is huge, right? First level 125, second level 118. Huge because right now we are trading somewhere around 130. So that's something that we can all keep an eye on. But this week, I don't think there's anything happening. Great. Oh, okay. Wei says dollar cat. Yeah, right. So again, depending on what are some of the entry techniques that you have. Some of you maybe you are trading like double bottom, right? Then on a 1 hour time frame, you can see this is double bottom for. That's a potential setup for you as well, right? So you need to have your own strategy for sure. Okay, you can't just follow blindly. So when I say I'm focusing on buy, then you just go and buy, right? That doesn't happen. Yeah. Okay, Ko Xiong asks, is there a way to determine which currency is strongest and which is weakest? Um, not on the. Okay, there are ways for sure, right? But I don't really use it to help me in my analysis. Okay, so maybe share with you one way is like, I know some traders use like moving average. Okay, how do I explain that to you, right? So let me do this. Okay, now this is not a technique that I use. It's not a technique that I recommend you use. But just sharing with you, this is one way that you can consider, right? And then of course you can take this idea and then expand on it. So how to look at it, right? Is that you can of course put in a moving average, and at the start of the week, right, as you say, what you want to do then is just look at, okay, what's the the difference, okay, between the moving average. Okay, so you compare every pair and you give, let's say like this one here on dollar cat, let's say it's difference of maybe, okay, make it easier for you, right? Because this one is a bit complicated. There's a little bit of stats and math in it. Okay, but I'll make it very simple version. Okay, so you just take one MA, okay, and then you just in an Excel spreadsheet, let's say dollar cat price right now is below the MA. Okay, so then what you do, okay, in your spreadsheet here you have dollar cat, right? So because the price is below the MA, which means dollar cat is to the downside, so you know that dollar here is weaker than your cat. Okay, so cat has 1 point, dollar has -1. So far can follow, right? So this is how you can use on one pair. Then you repeat this process, okay, on all the currency pair. Okay, so let me give you an example. So we have this dollar -1, cat +1, right? Then you go to euro dollar, then you see, okay, euro dollar right now is above, right? Okay, so euro dollar is above, which means that dollar is weak. So -1 again, so that's -2, and then you have euro stronger, you have +1. Okay, so you repeat this process, and then what you end up with is a currency and then a score to it. Okay, so then you just arrange that score from like highest to lowest, and then that becomes also a potential strength meter. Now I don't use it, but I know this is one method that potentially can use, right? If you are very kind of like objective towards analysis process, okay, this is one way you can use it. Okay, I did have like see some traders use before. I don't use it, right? But it might help you, right? If you want to look out for something to identify like overall what is the strength of each. Now the other one you can look up for is COT, Commitments of Traders Report. Now for that, I do take a look at that to see the positioning of each currency. That might give you some insights in like which is stronger, which is weaker, what is the interest of this currency, more buying, more selling. Okay, that gives me some perspective as well. But if you're talking about technical itself, what I do on a week-to-week basis is I just scroll through all my chart and start to pick up opportunities. So that's how I do it, right? I don't really look at individual currency strength, but I'll just look at all the pairs, all my charts, and pick up for opportunities. That's what I do. Yep, so Chris here also shared that you can potentially look at currency heat wave. Okay, if I'm not wrong, you go over to like investing.com, Finviz. Okay, Finviz. Okay, Finviz.com. They do have like heat wave or heat map, right? Currency heat map. And then from there you can also assess like the strength itself. But the algo that is running behind also comes from technical. Okay, so it's maybe a little bit more sophisticated from the method that I just explained to you now using MA. But the principle and the concept is more or less similar, right? They are using just maybe a little bit more different indicators to kind of calculate strength or the movement of the currency. Okay, so these are some instruments, these are some tools that will help you. Yeah, great. Okay, maybe I'll answer the last question here from Adrian. So Adrian asks how you read COT data. Okay. Generally there are three important data on COT, right? Make it simple, there are three important data. One is open interest, one is long position, one is short position, and of course with long and short you get net, right? So the idea here is you want to consider like open interest as well. Is there people interested in the particular asset, right? So that's what we call open interest in general. So if open interest increase means there are more interest coming in. If open interest drops means people are getting out of it, right? And of course, long and short is pretty straightforward, right? The more or the bigger the contracts in long positions, more traders are holding on to buy, and of course relative to short, right? And then if you look at net position, if you have a positive number, means more people are buying. If you have a negative net, means more people are selling. So that's like the basics of it. And of course from there you already can have a good understanding as to like, there are people interested in this asset. Are there more people buying or more people selling? Right? So from there you have a very good gauge as to like, you want to focus on buy, or you want to focus on sell, or you know there's no interest in it, people are exiting the market, then maybe you want to be paid. Right? So you can actually make some kind of analysis from this kind of data. Oh, Andrew asks, isn't that called currency correlation table? Yeah, I mean, there are a few tools on those websites, right? So one of it, I think, is also called the currency correlation. It's slightly different, okay? Heat map is currency strength, and correlation table is basically another thing itself, right? So yeah, I think like Finviz, investing.com, even Forex Factory, if I'm not wrong, have it, right? So you have some of this available. Yeah, great. So I really hope you guys are benefiting from this weekly routine. Okay, so again, really depends on the market. Like this week, not much that's happening. Really monitoring just some of the pairs. Let's say if you join in late, then just watch the replay after we end this, catch like what we cover at the start, right? So at the very start, talk about some of the potential pairs that I'm potentially looking out for this week. Okay, and of course, some of it is more of the longer term, like gold and dollar massacre. Okay, good. So that's all for me over here today. Again, great to have you guys joining in live and interacting, asking questions. Right, I love that. So yeah, if you enjoy this, just give some feedback to me by liking this video. Okay, that helps YouTube algorithm to share it out with, reach out to more traders as well. Of course, if you have trading community out there, friends, think would be benefit from this, feel free to welcome them and join us. Okay, and of course, free to share this video out to them. Yeah. So that's all for me. All the best to you guys for the week. And for those of you who perhaps can understand Chinese and Mandarin and would like to join in, we do have another session on Thursday. Okay, and again, the whole framework of the sharing is more or less the same, but of course, the opportunity in the market might be slightly. Okay,